Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 4th of September 2019, and we're briefly looking at the US dollar strength and a differing perspective on how it could actually be good for the US economy. So let's take a look. Yesterday, we produced a video entitled Why a New Global Reserve Currency is Necessary to Replace the Dollar. We've put a link in the description below. In this video, we quoted Mark Carney, the Governor of the Bank of England, and his comments at the Jackson Hole Symposium last month, where he more or less advocated eventually replacing the US dollar with a global digital currency, which in itself will be supported by a range of other currency values. Well, in terms of timing, that's some way off. But it is worth at least looking at the current world's global currency, the United States dollar, and ask whether its existing strength is harmful or advantageous to the United States. By the way, at the time of producing this video, the US dollar index stands at 98.5, 0.8 points down from yesterday's very lofty 99.3, but is still one of the highest levels it's been for over 2 years, in spite of anticipated pending interest rate cuts. So let's take a look generically at the advantages and disadvantages of a strong dollar. Well, advantages include 1. Imports are cheaper. Goods produced abroad and imported to the United States will be cheaper if the manufacturer's currency falls in value compared to the dollar. 2. Multinationals that do business in the United States benefits. Multinational corporations that have a large number of sales in the US and therefore earn income in dollars will see gains in the dollar translate to gains on their balance sheets. Investors in these companies should be rewarded as well. 3. Status as world reserve currency is enhanced. While some countries, including Russia, Iran, China, have questioned the status of the US dollar as the de facto world reserve currency, a strong dollar helps keep its demand as a reserve high. 4. Traveling or investing abroad is cheaper. Americans holding US dollars are able to see those dollars go further, affording them a greater degree of buying power overseas. Now let's take a brief look at the disadvantages. 1. Exports suffer. Just as foreign imports become cheaper at home, domestically produced goods become relatively more expensive abroad. 2. US companies conducting business abroad are hurt. Companies based in the United States that conduct a large portion of their business around the globe will suffer as their income they earn from foreign sales will decrease in value on their balance sheets. And 3, emerging market economies are negatively impacted. Foreign governments that require US dollar reserves will end up paying relatively more to obtain those dollars. This is especially important in emerging market economies. So, in summary, a strong dollar means that US consumers pay less for imports. It also means that foreign consumers must pay more for US exports. A weak dollar means that US consumers pay more for imports from foreign nations. However, foreign customers will pay less for US goods and services, which will help increase production and employment in America. So central banks have to balance these differing priorities and equations in order to maintain a degree of equilibrium or sustainability where it can. Which then brings us to an article we read in last week's Money Week magazine. The heading being, "A Strong Dollar Squeezes Asia." This is what it says. Strong dollar squeezes Asia. Quote, "For currency traders, August was no day at the beach," unquote, says Shuli Ren on Bloomberg. Trade war uncertainty means that the MSCI Emerging Markets Currency Index is on course for its worst month since May 2016. China's yuan fell to a new 11.5-year low against the US dollar, but the falls have been broad-based. Last Monday, Turkey's lira briefly plunged as much as 12% against the yen in a flash crash that burnt Japan's amateur forex traders. The flip side of emerging market currency weakness has been continued strength in the US dollar, much to the chagrin of one Donald Trump. Trump tweeted last week to complain that the dollar is, quote, "the highest in US history," unquote. He's not far wrong, says Andrew Hunter of Capital Economics. The US Federal Reserve's trade-weighted index, which tracks the greenback against a basket of trading partners' currencies, is close to a record high. The White House believes that China and the Eurozone have been, quote, "unfairly," unquote, pushing their currencies lower, which boosts their exports and fuels America's trade deficit, which stood at $55.2 billion in June. Yet there is little evidence that the strong dollar harms the US economy. Indeed, its strength has made the price increases triggered by Trump's tariffs more bearable for US consumers. Trump's obsession with trade deficits is entirely wrong-headed, says John Mauldin in his Thoughts from the Frontline newsletter. Rather than being some sort of scorecard, the deficit means that Americans spend money on Chinese goods and Chinese people then reinvest those funds back into the US assets, particularly Treasury debt. That keeps interest rates low and Americans wealthy. A strong dollar puts pressure on emerging markets as businesses often borrow in dollars, but earn revenue in their own local currency. China's falling yuan is another problem, as it could make exporters elsewhere in Asia less competitive. Yet more Asian economies look well insulated against an outright crisis, says Vincent Sui of Gavelcal Research. Rising domestic savings rates mean that local buyers are ready to buy up bonds when foreigners panic and flee. That makes local financial markets more stable than in the past. That is just as well, because dollar strength looks set to continue. Dollar assets remain a trusted safe haven during periods of global fear, and there is plenty of that around at present. With US interest rates still higher than those in Europe or Japan, asset managers are likely to continue pouring funds into the United States. In the long term, however, it is worth asking whether the dollar's days as a reserve currency are numbered. So there we have it. Advantages and disadvantages. President Trump clearly wants the value of the dollar lower to help exports. However, at least short term, this will likely lead to an increase in prices and therefore inflation. As for example, in 2018, total US trade with foreign countries was $5.6 trillion. That was $2.5 trillion in exports and $3.1 trillion in imports of both goods and services. So the US is currently a net importer. And while it remains so, a strong dollar helps its buying situation. Now, of course, there are other factors which a strong dollar impacts, such as capital investment and attractiveness of international borrowing. But as you can see, the picture is far from clear. What are your thoughts? Do share. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.